Hello students, let's start our new topic, that is journal entries. This is the basic for every accounts. You should know how to journalize the transactions. And for that you should know the rule which we have to follow, which we usually follow. That you can see on the screen, which says debit what comes in and credit what goes out. So whenever you see a transaction, you should be able to know what is to be debited and what is to be credited. It simply means that something is coming to the business and something is going from the business. That means it has two aspects. One is debit and other is credit. And as per rule, it says that we have to debit the incomes and credit the outgoes. So when we see any transaction, we should be able to make out what is coming in and what is going out. For a simple example I can give, salary paid to employees. Here salary is paid by the organization. So here cash is going out. So we should credit the cash account. And what is coming to the business? Expense is coming in the form of salary. That is, the company has to pay salary. Organization has to pay salary to the employee. So here debit salary and credit cash account. Salary account should be debited and cash account should be credited. Take another example. Purchased machinery for business purpose. So machinery, when they are purchasing, whenever we are purchasing, we have to make payment. So from business, what is going out? Cash is going. And what is coming to the business? Machinery is coming. So what will be the entry? Machinery account DR to cash account. Okay, now you can see some examples on the screen which shows purchase goods on cash, salary paid to employee, sold goods to Rajan on credit, cash received from Rohan, fifth one, cash sales. So here these are the 5 transactions and we have to recognize, we have to find out what is debit and what is credit. That means what is coming in and what is going out. To make the transaction more simpler, you can see on the screen how it is showing. For each and every transaction, what is coming in, what is going out, it shows it clearly. See, in first, goods in, cash out. Second, expense in, cash out. Third, debtors in, sales out. Fourth, cash in, debtors out. And for fifth, it shows cash in, sales out. Okay, so this is how you have to know for each and every transaction what is debited and what is credited. Once you can know what is debited and what is credited, or which account should be debited, which account should be credited, then it will be easier for you to pass the journal entry without any mistakes. So now let us see the solution for the examples. On screen you can see purchase account DR, debit to cash account. You will be having 2 columns, debit column and credit column. When you debit the purchase account, you will be writing the amount on debit column, and when you are credit any account, you will be write the amount on credit column. And you have to write narrations also for each and every transaction. When you pass journal entry, you have to write narrations as well. For narration, for exam point of view, narration is very important. You have to write narration. For that you will be scoring mark, and if you fail to write narrations, your mark will be deducted. Even though if you write entries correctly, you won't be getting full mark as you have not written narration. So make sure for every journal entries you should write narration. Okay. Now next is salary account debit to cash account. So for salary account on debit column you will be writing the amount, and for cash account on credit column you will be writing the amount. Narration again you have to write as per your question. You can write your narration. Okay, doesn't matter whatever you write, but it should be according to your question, and no need to write it lengthy one, just in short you can write, but you have to write, you cannot leave it. Okay, otherwise you will lose your mark. Next is Rajan account debit to sales account, goods sold on credit. Okay, so the next two you will do by yourself. Okay, so thank you for now. Bye.